Hello, welcome. It is Friday, 23rd day of September 2016, and this is the second video for the day, as the last one had very poor audio that I want to get fixed, and I think I'm going to within this video. So I'm going to go over some things a little quicker that I did before. Symmetrical triangle in the daily chart, more signs of neutrality, and as I've been stating for several videos, within this range, it's neutral. And definitely an upward bias on many fronts. But on the break of whichever one has to break first, don't be surprised to see here, serious move up to about 25. Down below, at least a move to this point here. And who knows what it would do after that, because the manipulation and just the moves that have been historically done before can easily be played within the market today, I would think. Again, my bias is to the upside, but a lot of times I'm looking for different confirmations. I'm going to focus primarily within the Canadian charts. 26 Canadian. Well, the currency is about 130 or 30% difference. So 20 times 30% more, 26. Back in here, the Canadian one was many percentage points higher. So you got 50. Canadians got 47 and change. Not really much of a difference. And several times in the last many years, it's been a few percent usually with the Canadian currency weaker. On the bottom, well over 40%. I think close to 50 almost. I'm not sure quite, but today around 30. But as far as how this market plays out, it's very good when you're looking at by the book, when you're just going over the basics and teaching chart analysis. You have this obvious downtrend. One in which it really never got above the 18 average. It did briefly here. It established resistance without even coming close to taking it out. And then going further, you developed a key support mark. And this was supposed to be big levels, as I was talking about before. The 18 to 20-ish range, which was big in 2008, 2010, and so on. It was a big level, and this is where you talk about that possible failed breakdown. And normally it has a fast move faster, but that's another key point. But for market reversals, I like to see the band flatten out. Well, there's a long period of it going flat. And then on the breakout of what again is obvious resistance in around 22 and change, quick one green candle move up, which got past Fibonacci, no resistance, rather it's pretty much supported it, and not even supported higher most of the time, but establishing key resistance. And now, because it's came back to this band, which is the next step after establishing this 27-ish area, is on the break of this key point, you're probably going to have a relatively fast move to the next one, which happens to be in around 31.5. So that would state that when 21 gets broken in the United States, 22-ish area, that it's going to go up to 25, 26 when Canada goes up to 30, 31. That would be what I would see in as they play out together. And then getting above this key level would really kill this bear market. Now on another chart, which takes us back even further to 2007, it got past this point here, came back to this line. I stated in a video in July that when it came up here, not a bad time to short, cover right around exactly where it went, which is interesting. But now that it's coming back up to this point again, I'd like the chances that it's probably going to hold 23 and change for a while, and at some point break out above this level, and as we've seen in the previous chart, make a move up to 31.5. And then what would be ideal from there is come back to this key Fibonacci point as support and then break it. And then you're talking about the previous highs from 2011. So that's what the ideal market would be. So thank you for tuning in to this video, and have yourself a great weekend. Bye-bye.